yelling into what probably felt like an abyss for a while. Do you finally feel vindicated?
We launched this fund in 2018. A small cap manager here in Sydney came up to me and said, "You might be the shortest lived fund manager in the history of fund management." I reminded him of that comment last year when he was on site at Ross's honeymoon.
I fucking told you, boys.
We're at the beginning of a multi-year sort of shift here, I think.
G'day, money miners. We're getting back into the yellow cake. These Twitter, just to serve as Twitter or X. People call it X yet?
No,
I don't think so.
Nah. Anyway, mate, we've got one of the head honchos of the investment industry, you'd say, for uranium, Guy Keller.
Nuclear, mate.
Nuclear. So Guy Keller runs the Nuclear Opportunities Fund for Tribeca. No, that's not the full name because I couldn't remember.
That was pretty
it,
good, mate. That was pretty good.
And you'll see I'll fuck it up later as well.
The translation is just uranium fund.
It's a nuclear fund, yeah. So it sounds like he's it's uranium stocks, but other nuclear technologies and stuff as well.
Yeah,
so,
but the money miners want to know about the stocks.
They just want to know what's going up. Yeah. So no, it was a bloody good yarn. I reckon we'll just rip straight into it, boys. Every you want to know anything uranium stocks, ASX and around global, this is the bloody spot.
Market
That's
dynamics
it.
that works. It's wicked.
Before we rip in, Matty, we've got to thank the team at Anytime Exploration Services.
Anytime now, Trav. I know when we talked about anytime, anywhere, any altitude, I'm not going to go to the level of saying they'll work at any radiation level because that is not what they'd put their workers through. That is safe, probably, mate. I would say uranium and radiation levels is the only thing that Anytime have a certain parameter to work within.
Gotcha.
But
don't taint the good name of a uranium mine.
Outside of radiation levels, they will pretty much do anything.
Oh, a place like Boss Energy, there's no uranium in and around the PVC pipes floating around.
Exactly.
They can give Seamus a call. He will sort them out.
We said any altitude. Will they do any depth? Because like Nexgen's 500 meters below depth. Will they go that deep?
Oh,
it is radioactive.
Oh no, but as long as it's within that threshold, Anytime's fine.
Will he go to the Athabasca
one
Basin?
rule at any time.
Anywhere, mate. Anywhere.
Anywhere. Mate, there's nothing you can say. Anywhere.
So
Anywhere, any risk.
All that said, if you need people, you need core cutting, core storage, the whole works, just give Seamus Murphy a call.
Sampling, they got vehicles, they got, they're getting in everything. And as we said, rumours are they're getting into planes because they've got to buy a jet when they get the Philo mining contract to fly everyone over. It's all intertwining.
Yeah, the Gulf Stream.
Anytime Exploration. Thanks, Seamus and Victoria Murphy. If anyone didn't get any of that shit talk, they do everything exploration.
That's
so
it.
Hit them up.
All right, let's rip into Guy Keller from Tribeca.
Good times. Here we go. Right, boys, here we go. Guy Keller, who runs, as we mentioned before, the Tribeca. Oh, fucking forgotten it already. You might as well say it, Guy.
G'day, I'm Guy Keller. I'm the portfolio manager of the Tribeca Investment Partners Nuclear Energy Opportunities Fund.
Oh, you can
it's
see
lovely
why
to be here today.
You can see why I couldn't remember it. There you go.
Guy, it's awesome to have you on Money in Mind. The listeners have been itching for an episode on uranium, and obviously you focus a bit broader than that, nuclear and this whole sort of renaissance. So I'm keen to rip into it and get started with you sort of painting a bit of a picture for how things are looking at your end at the moment. You've been in the fund for quite a few years now, and it seems like a lot's coming together this past little while.
Yeah, I mean, look, it's like anything in commodities. There's cycles, and the uranium cycle has been through more than 10 years of a pretty deep bear market. And that came about as a result of the anti-nuclear sentiment after the Fukushima tsunami. So we'd been in a very healthy cycle back then. The rug got pulled, and what attracted us originally. I mean, I work as well for Tribeca's global natural resource business, and I was looking at everything, and uranium came up as something to look at, and I said, I'd rather model soybean seasonality next. Uranium's dead in the water, and looked at it again, and then the first thought that popped to my mind is, oh no, everything I've been doing is wrong because this doesn't make any sense. Coming from a background of physical commodity trade and commodity derivative trading, it became pretty obvious that a lot of the things that people were talking about weren't an issue, inventory and all that sort of stuff. And in fact, I thought that was actually a positive because it was the industry drawing down on it. And, it's a really easy thing to model on the demand side, quite unusually, because it looks through cycles. So you could see the demand out 10 years and you could see it, yes, naturally declining. But we started this 6 years ago, started this journey with a primary mine supply deficit that was on the existing fleet of reactors, where there was the ability for a few more to switch back on, notably Japan, which is slowly happening. And so it was a pretty robust sort of fundamental reason to have a look at the sector back then.
And what were some of the major catalysts that you said you've come from that big uranium bear market? What are some of the biggest catalysts that have been why we're sitting at, I think it's $69 today, 72 the other week? The top five.
Look, the realisation, I think, from our global natural resources platform with that sort of move towards decarbonisation and the commodities required for decarbonisation, and when the battery electric vehicle revolution sort of picked up a bit of steam, and the obvious point was made that it's great to own a Tesla, but if you're plugging into coal-fired generation, it's not actually solving a decarbonisation problem, just moving those emissions somewhere else. So that obviously then became, how do you decarbonise electricity? And the obvious question, or the obvious answer to that, was already there. There's 32 nations in the world using nuclear electricity, and a lot of them have been doing it for more than 60 years. And it's zero carbon or low carbon baseload electricity. So I think that realisation started people eyeballing the sector. But what really then sort of kicked it was, ironically, COVID and the supply disruptions we were seeing of moving physical commodities, but also that difference of developed nations trying to push through COVID and the developing nations having many more problems with labour and what have you. And, it was a very concentrated supply of more than half the uranium being mined coming out of Kazakhstan. I think that was then what put the spot price movement through $20 and then $30. That was what originally kicked it off. And then again, more recently, with Russia invading Ukraine, energy security has become front and centre of government policy. So you've had governments now forcing, or not forcing, but actively encouraging utilities to keep their nuclear reactors on, and the ones that they were planning on turning off, it's like, no, we want you to keep them on and extend that. So, that supply deficit you had with a natural sort of retirement of some reactors became even bigger because a lot of those reactors are now staying on. They've been the biggest drivers.
Guy, as you pointed out at the beginning, this is not a uranium stock fund. This is a nuclear fund. I'd be keen to hear from you the distinction and why you set it up as a nuclear fund.
Nuclear opportunities.
Yeah, so
Opportunities,
exactly right.
Everything's an opportunity, isn't it, boys?
Is it to buy enrichment, companies as well and the sorts, or is it?
Well, yeah, I mean, unlike coal and gas going into electricity, where the coal that comes out of the mine is pretty much the coal that's shoveled into the furnace. Uranium goes through a fuel cycle from mine mouth to reactor core of 18 to 24 months, and does a whole bunch of things. And so we looked at that. So the end product that the utilities end up putting in their reactors is very different from the yellow cake coming out of the handful of mines that are producing it. What we sort of worked out there was that a lot of that fuel cycle is semi-government or quasi-government or government-owned, so it wasn't really investable. There was the opportunity to maybe look at the utilities, but they're sort of, again, well, now in the United States there's one that's a bit more uranium or nuclear focused, but a lot of them, nuclear was one part of what they did, so they'd have coal and gas and hydro and solar and wind and things. But then more importantly, as we started looking, this is 6 years ago, as to what's the technology that's going to displace this thesis. Is there something that's going to come and replace fission? And the obvious one was fusion. But what we found in that, but that's still a ways away. But what we found in that investigation was this whole sort of small modular reactor and micro reactor push we thought, you know what, eventually there's going to be investable opportunity there. As this thesis matures, that's something that we could potentially be involved in. And we've got a little exposure. We call it nuclear innovation, just as a little placeholder there in the fund. There's just 2 positions in that as a reminder to investors that's where we can and will end up focusing some of the portfolio.
Guy, I think we're going to go deep into some of your pertinent views on the market, the dynamics, and especially the stocks, since we're a bloody mining podcast. But before we go there, I really want to know, after yelling into what probably felt like an abyss for a while, do you finally feel vindicated?
Yeah, I got to admit, when we launched this fund in 2018, a small cap manager here in Sydney came up to me and said, "You might be the shortest lived fund manager in the history of fund management." And I reminded him of that comment last year when he was on site at Boss's honeymoon, checking out what was going on down there in South Australia.
I assume a few times you would have said, "I fucking told you, boys."
But yeah, I mean, we're at the beginning of a multi-year sort of shift here, I think, and so yes, I'm glad that it's working, and I'm glad that it's getting eyeballs, but I think it's got a lot further to go. And whilst every sort of broker has probably got a PA position in uranium stock somewhere, there's a hell of a lot of institutional money globally that's just not invested in this sector yet. So there's plenty more eyeballs that we need to convince that this should be a mainstream investment thesis.
How do you sort of, you keep referring to this big thesis, and it's quite different to a lot of other fund managers who will sort of tie onto a thesis or a thesis in around a specific stock. But there's the sort of big one here that the whole fund is kind of built on. For the life of the fund kind of point of view, do you get to a point, say in 5 years, say in 10 years, where you're like, yes, the thesis was right. In 2020, 2021, we saw the first leg up and then another one. And then you're like, I was right. I can shut up shop, and that's how it goes? Or how do you sort of envision it playing out?
Well, I mean, again, that's sort of the nuclear technology angle there as well. As we move forward into a more mature sector. I mean, you've got to remember as well, last cycle there was over 500 list opportunities in the uranium space, right? I think in 2018 when we first started looking, or 2017 when we first started looking, there's about 20, and now there's maybe sort of 50 or 60.
Maybe the nuclear opportunities include buying put options on the stocks at the top of the market, JD.
Well, it is long shorts. But so there's still a big runway. I've got a database of last cycle projects that are good projects that would have been much closer to development had we not had Fukushima. So there's that angle to still play out. You start getting, when you get more projects into development and there's free cash flow, you get a more mature investment opportunity there. M&A cycle then continues as it did last cycle, where the big boys realise that it's easier to buy something that's already operating than build another one themselves. And then you do get that nuclear innovation as Bill Gates wants to bring liquidity to TerraPower and all those sorts of things. And that's going to be very North American focused. That seems to be where that technology push is. It gets less volatile as the sector increases and the focus shifts slightly. But I still think there's a fair bit of runway before I'm wondering whether to shut the doors or change the title of the fund.
So at a portfolio level, you sort of touched on the big boys potentially buying other assets. You've got a number of different ways to play it. You've got assets on care and maintenance. You've got the large players, the exploration plays. You touched on the smaller innovations. How do you kind of think about piecing them all together to build a portfolio?
Yeah, so this year has very much been a focus on at one end of the spectrum on the uranium miners has been those in production. I mean, Cameco's obviously had a phenomenal run, and whilst I'm not paid to own Cameco per se, it has been a good place to park some capital. But also those that are funded into production, because what we're seeing this year, there's a bunch of developers who were sort of sitting there talking to 2016 PEAs or 2020 studies, decided in their wisdom to go and update their numbers. and they're throwing out much bigger, cost or capex requirements than they might have been talking to. That shouldn't be a surprise because we've seen it in gold and copper and lithium and you name it. It's been since COVID. That's half of the course. But I think the difference is there's so much less analyst coverage of the uranium sector that it does catch a few people by surprise. So especially the retail sector. So I have sort of stayed away from those people updating numbers because on that basis of as I said, there's a bit of sticker shock. If there is a sticker shock and I still like the project, then there's some good dips to buy. But the other end of the spectrum has been, as I said, that pre-IPO, old cycle projects coming back in and the new shells, getting vended out of things. There's been some really good opportunity there. I mean, I've passed in the last 6 months. I've passed on more than I've participated in because the real diamonds haven't shaken loose yet. But again, that's that understanding of this. If somebody's coming up with brand new, and in fact, I had a meeting the other day. Somebody staked some land in Athabasca, never been drilled, and said, "Give me some money." I said, "No way, you're about 3 waves too early." Because there's so many people that have got historical drilling somewhere that know exactly where to drill again. So there's a big focus on that exploration. So, and again, it doesn't. I don't want to see a process flow sheet from them. I don't want to see an estimate of costing. I want to see them prove to me that they're finding uranium where they say they're going to, and we get a stock appreciation on that.
You touched on Cameco earlier as well. We saw the big transaction with Brookfield and Westinghouse. I'm keen to hear from someone who's very deep in the nuclear world what you made of the transaction at the time and if it's sort of changed at all since, and the sort of strategy of Cameco more broadly.
Yeah, it is a transformative deal for Cameco. And there was a lot of focus at the time that it takes them away from being a pure play uranium miner. The reality was, but even before the Westinghouse deal, they weren't a pure play because they've got a fuel services business and a whole bunch of other businesses. It properly vertically integrates them. What we've seen is that they almost become a proxy for the US government. I mean, there's been some big deals been announced with Ukraine and some other countries there. It properly puts them in the position where, and then with that, potential deal with GLE and Silex and the laser enrichment, they really then get that whole stack. So they become a nuclear player, not just a uranium play. I think more importantly, part of what the market missed because of the focus on the Cameco angle of that deal, Brookfield Renewable Partners, it's the biggest energy transition investor in the world with 125 gigawatts of projects under development, has basically given that whole sector a big green tick on nuclear and nuclear services to say this fits in our investment strategy, where in the past, perhaps people had thought Brookfield Renewable is just a wind and solar play. And so I think that's really, really caused a whole part of that investment market to go back to the basics and go, wow, what do we now need to skill? And when you talk to the investor relations at Cameco, they say their biggest inbound has been ESG, energy transition investors saying, we need to understand this deal. And now their second biggest inbound has been energy investors saying, this looks like it's the oil and gas investors saying, we want to understand whether we should be invested here. And, you're going to see much more information come out in the next few months when that deal gets ratified. I think the UK was the last country to sign off on the deal. And so we'll see a lot more economics around that. And it's a truly annuity-based, long-term, business now.
So you've touched on a few times now, institutional money and the real big dollars from these big players coming in being a key step in the next leg up. But what is the sort of catalyst you think that sort of brings them in? Is it just the spot price continuing to run higher? Is it perhaps more governments mandating nuclear reactors being built and such, or is there something else in mind?
I think it actually comes down to market cap. You've got the whole market cap of the whole uranium sector. And remember, this is a global sector that produces responsible for producing 10% of the world's electricity, carries a big burden of the zero carbon part of that electricity. The whole global market cap, including the free float of Kazatomprom, it fits inside Fortescue or Woodside. So the market cap is tiny for what they're doing. Last cycle, so they're about $40 or $50 billion. Last cycle, the market cap was closer to about $200 billion. And so I think that certainly with global investors, they can invest in much more liquid things like Cameco. Whereas down here, you've got Paladin and Boss, and then a bit of runway between what's next on a market cap. You're already seeing in Australia, you've got Boss, Paladin, Deep Yellow, and Silex now in the small ords, and they're around 2.5% of that index. So, that June last year was zero. You've now got a whole new sector appear on small cappers' radars, and whether they like it or not, they need to make a decision as to what they do about it. So, you're running $1 billion of small cap money, you've got to buy 22 to 25 odd million bucks of stock just to get index weight on those four names so that you're not getting a performance lag. And then the decision is to go overweight. So you're seeing a lot more of that come into those names. And that will only continue, I think, as the market cap increases.
Guy, on your point on index inclusion there, I look at some of the consolidation in the uranium space, in recent history, kind of kicked off with, Vimy, Deep Yellow. We saw Lotus's merger with ACAP, ISO Energy, and Consolidated Uranium. That was, TSX listed stocks there. But they all kind of feel along the lines of a theme of these developers. They merge together and they get a bigger market cap. The cynic in me sort of wonders if the rationale behind a lot of these mergers, because a lot of them have projects that aren't even in the same jurisdiction as each other, if the real rationale is just to have a bigger market cap so you get included in the index and there's more programmatic buying as the uranium bull market goes on. Is that an accurate depiction of the rationale driving the consolidation, or is there something else here?
I'm not sure that the CEOs and boards of those companies would say that's accurate. I mean, it probably they would believe 100% that what they're buying is accretive to their share price and their shareholders. But it's certainly, I mean, it would have to be a shrewd board would think about that, because at the end of the day, the bigger market cap you are, the more interest you have. The more ability you have to tap the equity capital markets or debt markets. When it does come time to develop a project, the capex requirement versus your market cap looks less onerous and doesn't scare as many people off. But I'm sure they've probably considered what a combined market cap looks like in those decisions.
There's another sort of layer to the uranium market, which is really fascinating. That's the sort of spot market, and then these physical players jumping in. So again, keen to hear from someone who's got the experience in this industry. How do you sort of view the spot market? It's so different to the likes of gold or copper that we talk about frequently. How do you look at that?
Yeah, I mean, so the uranium purchasing globally is basically like what iron ore used to be, 15 years ago, where, basically you priced iron ore off the BHP 1 year contract price to Japan, plus or minus your impurities and maybe some freight and things like that. In other words, everything is happening. All the real business in the uranium market is happening in a contracting, long-term contracts, where utilities are engaging in 5 to 10 to 15 year contracts, normally priced confidential and term confidential. The spot market is really, realistically, the sort of last resort market. And yes, companies like BHP have been selling into the spot market, as well as some other producers in Eastern Europe. But it's a tiny market, and people look at the price discovery there and assume something's happened. I've seen the uranium market move $2 or $3 without a trade, or if it has been, it's £100,000. So it's a really small, maneuverable market, and I think the Sprott Physical Uranium Trust has brought lots of eyeballs to that. I don't like talking about the spot price because, as I said, everything happens on contracts. But I get it, right? It's the most observable instrument for investors. It's the only thing they can actually see, because otherwise they're believing me or somebody else as to, what Duke or Consolation's just done with, a producer. But so the reality is, when it does move, and it has, it does get the junior market on the uranium markets moving as well. So it is important as to what's going on.
And do you think as the nuclear market in general sort of grows, does it become a more liquid market?
No, I don't think so. I think because the utilities are, so keen to actually secure supply. If anything, it's the opposite. Those producers who are traditionally maybe putting something into the spot market are now getting approached by the utilities and saying, listen, we can trade a spot price with you, but give us a volume contract. So if you've got £1 million you need to sell next quarter into the spot market, we'll take the £1 million, and whatever spot price at the time that you want to transact is the price that you can get. And so, in fact, what that's doing is meaning there's less pounds in the spot market, which means when the Sprott Trust and some of these others start trying to get in and move it, it's going to be even more volatile to the upside.
Guy, I'm pretty curious you've got proximity to the market in a way that most don't, and everyone loves to speculate, especially on stuff that's flying. And you probably have some views on some misconceptions that the punter who's new, looking at uranium companies, looking at the spot market. Like, what are the most common misconceptions that you think people should just bloody wipe out of their brain as they go deeper into this space?
As in, every uranium stock's going up. That's one of them, isn't it?
They are, aren't they?
All of them in the Tribeca fund, apparently.
Yeah, the ones I've picked certainly. Look, I think the most common misconception is listening to equity analysts who want to tell you that a stock's too rich. And that I'm getting that a lot. There's obviously some ASX stocks that have moved extraordinarily well, and because these things aren't free cash flow generating or producing, we're talking like price to NAV or EV to resource and things like that. I keep.
Well, mate, even the cash flow producing ones, they're putting on bloody EV EBITDA multiples now because they're trading way above NAV. So
yeah, exactly right. And I sort of sit there and say, well, you've got a scarcity premium here, where and you're also assuming a price that is not adventurous. And I think one of the brokers increased their long-term price from $70 to $75, and I said, well, why didn't you go to 80? Oh, we couldn't get that through. I said, well, why not? Oh, we don't think it's going to get there. I said, why? I'm not trying to sit here and say this thing's going to $300 or anything like that. What I'm saying is we've moved to a point where apparently there was going to be a wall of supply, because our $60 medium-term incentive price was scaled up to $70 because of cost inflation and what have you. But it's not just price. Price is not going to solve this problem alone of getting this supply to market. So, we quite happily accept some lithium moves that are just eye-watering. Stocks rallying 4,000 to 5,000% off their bottoms and say, oh, well, that's lithium. But when we get this move in uranium, that misconception, it's done enough, it's expensive now. I don't buy that. If you sat there and saw some of those lithium prices where we topped out, and if anybody told you 3 years or 5 years earlier it was going to get there, you would have said they were crazy. But it did, and it got there, and it stayed there for a long time.
Do you think there seems to be quite a bit of weighting to that last peak, that sort of 2007 peak that just the price went up astronomically? And I always hear people who are bullish about uranium, they reference that and they're like, we're going to get a repeat of that. Do you think there's a little too much of that referencing that, or that's actually not that good a guide perhaps?
It's an easy reference because that was a spot price move, and So if these financial vehicles really get ahead of steam up, there's no end to where that price could move to, because, when that Sprott, assuming it continues to issue stock on that at the market facility, they may get to a point where they say, I know we're at a premium, but we can't issue because we're going to be holding too much cash. So they may be able to do that. But when you've got them, and you had a US listed company the other day raise some money, go and buy some pounds again. Like, the reality is the spot price can go wherever that financial demand leads it, because it's not a real indicator. The real indicator is going to be where the contract market settles, i.e., what sort of price do utilities have to wave out there to get certainty of pounds in starting out 3 to 5 years' time. That's going to be the real barometer of what the market's doing, and then can it stay there and will it stay there? So, it's, as I said, it's an easy comparison to draw to say, it's going to go to $140. As I said, if you get enough financial vehicles in, it could go to 200, whatever. But is there going to be real activity trading there? Probably not.
I'm curious. I think the demand side of the equation is something the typical punter kind of understands, and everyone can feel the sense in perception changing, and we can feel a bit of a nuclear renaissance upon us. But it's the supply part of the equation I think it'd be really useful to unpack. In your August letter, you included this quote. I'm just going to read it briefly. Last cycle, there was a long line of shovel-ready projects preparing to come to market that coincided with Kazakh supply growing exponentially, and the pace of new reactor builds had declined. This time around, the Kazatomprom and Cameco are struggling to reach previous levels of production, and only some of the last cycle idled production is attempting to come back. Hold that thought for a moment, right?
You're getting held to account for everything you've said in history, Guy. Yeah, you can't get away with anything, mate.
So in addition to reading your commentary on supply there, I was on Twitter last night, and the koala posed this question, which I'm going to steal and put it to you. He says, time to antagonise uranium Twitter. Olympic Dam goes from 6% to 12% of current supply, approximately 12 million pounds. Kazatomprom runs at 110% subsoil given spot $60 plus. Cameco debottlenecks MR and restarts Rabbit Lake. Lee decides to do some real work for his options and builds Arrow. How many pounds or percentage annual demand did the koala just bring into the supply stack before 2030? Which one of these doesn't happen? Supply forecast can be fickle, of course, but know a trade versus a fundamental investment. So I guess I'm trying to reconcile these two different views on supply, but just want to ask you, based on Koala's sort of indicative supply coming online, granted, some of that's like medium term. How do you still have a pretty buoyant outlook on supply amid that sort of case?
Yeah, I mean, the reality is, so let's just look at the reactors being built at the moment, 61 reactors. They're going to require 30-odd million pounds a year of uranium. And they're going to be connected in the next 5 to 6 years. So when you look at that in perspective, you say Nexgen's going to do, life of mine, 22 million pounds a year on average. So Arrow comes on, and it's not even mining enough uranium to fulfill the requirements of the 61 being built. Cameco get up to capacity on MacArthur River and Cigar Lake. Sure, again, from what they're trying to do now, that extra pounds is welcomed and goes some way to closing the supply deficit of the existing fleet. BHP were in the news the other day saying with uranium prices up here, we might consider expanding Olympic Dam. And so, well, hang on a second, you had a gold price of $2,000 and a copper price of $4.20 a pound, and you weren't wanting to expand it then. And now you've got a byproduct that you never want to talk about, and you include it as an asterisk in your as a byproduct credit, and suddenly you're expanding Olympic Dam on the back of that. Okay, boys, we'll see it when it comes.
It's like coal. They got rid of they weren't mining coal in their announcements either.
Yeah, exactly right. So, yes, it would be the utilities would welcome that. The Kazakhs are more interesting. And, when they put out their 2025 guidance to come back to their subsoil lease agreements, and yes, they have the ability to flex that another 20% over. Again, the point the market missed was almost all of that expansion for 2025 has already been accounted for by Russia and China. So it's not going to be available to the West. And this whole idea that China is just going to contract what they need for what they're building, again, is a misconception. China's going to 70 gigawatts of nuclear. They're planning to get to 150, and they'd like to get to 300. 300 gigawatts of nuclear in the next, and that's by 2035, I think. That's 150 million pounds of uranium a year that they're going to need. So if the Kazakhs are going to then go to plus 10 or plus 20, guess what? They're going to take it. The other problem that you have with the Kazakhs, and it's largely somewhat a short-term problem potentially, is that they've got some logistical issues in getting their uranium out of their country, because most of that went through the port of St. Petersburg. And whilst Russia decided to want to continue to flex their muscles and be bad boys in Ukraine, there's not much coming out there. And then their Trans-Caspian route is going through countries where there's a civil war going on, and they've not been able to properly bed that down. So whereas going across to their bonded area on the China-Kazakh border, where they're building, that route is completely open. So, I sort of look at that again and say, there might be some marginal pounds for the JV partners. So for Cameco and Inkai and Arano and all those guys, they'll get some marginal pounds out of Kazakh expansion. But that's not going to be easy.
You mentioned BHP's attitude towards uranium there. And I look at the dynamics in the world at the moment. I can't help but have the thought, like, where the hell are the majors? You even saw like Rio divest Rough Rider last year, and they're kind of pretty absent in the conversation. Like, why is that? Do you think it changes? Do you think they've laid their bed and they're not going to enter the arena?
Yeah, even last cycle, the majors were later in the cycle, and there were some eye-watering prices that were paid for projects. And again, I think part of the problem here is that because we've just had more than a decade of just underinvestment and zero capital spent, there's not that many projects that a major could, weigh into and have a path to production in the next sort of 5 years, right?
Nexgen's the one you just think, like, why hasn't that been gobbled up, right?
Yeah, but again, that's again proof that the majors are going to come in and BHP will come in and do what they did with Oz Minerals. We can't build new copper, so let's buy existing copper. So it doesn't actually solve any of the problems, because Lee's project, Nexgen's project, will be able to come to market in the current corporate structure it's in, because it's a phenomenal project. So that, again, if a major weighs in on that, it doesn't change the supply demand for utilities. And I think that even in Canada, where you're looking at all these earn-ins and joint ventures in the Athabasca, and there's some larger players who are sitting on the sidelines. And again, they're sitting there saying, let's just let, flow through capital, do all the hard work. And once it gets to a point where community, there's some studies done on it, there's a defined resource, maybe then and if we have to take it at a multiple, the hard work's been done. We're not stuffing around with kicking rocks on the back of Land Rovers.
Is it a function of, because BHP and Rio haven't gone into lithium either? Like, is that they just see these commodities? Well, lithium's a lot younger. Uranium's been around for ages, but is it just too uncertain and too risky for them? Is that how they view it?
Well, they continue to, Rio, they talk about, they want to do it. Again, I think it's just,
but they
haven't
still haven't
found something they can do. And plus, you got to remember there's been a few not very popular decisions that those majors have made in the previous cycle in other commodities that they've spent the last few years trying to get themselves out of. So they're going say to your shareholders, by the way, we're lobbing in the lithium and uranium, and it may come to market in 15 years. I can see why they're probably waiting for it to mature a little bit.
I reckon it's time to get into some of the more stock specifics.
We put the question out to the chat group, Guy, about what questions are asked. One bloke said, I forget the exact words. Ask him which uranium stock's going to go up the most. So that's the punters in the group, mate. Logical place to start on the ASX, mate. It would obviously be Paladin, PDN, mate.
Yeah, so they've owned 75% of Langer Heinrich. Say they are fully funded in quotation marks. Production Q1 next year, so not too far away. And then they've got sort of a higher run rate for the first 7 or so years, then it drops down a bit. I think it drops down to £3.5 million per annum. But, I mean, essentially, what do you think happens here? This is the one that ran from, nothing up to, I can't remember, $10 or something back in the day. So this is the one that a lot of people have their eyes on.
And then gave it all away.
Exactly. They gave it all away in the end. So how do you kind of see, or how do you weigh up the current valuation for Paladin?
Yeah, I mean it's going to be producing a decent amount of pounds. I mean, again, on a valuation basis, it comes down to the fact that they're going to be one of a handful, one of something you can count on one hand, companies producing pounds in the next 6 to 12 months. So from a valuation perspective, I'd say, again, analysts might say, oh, it's topping out here, but it matures. It becomes a producing company, it becomes more investable for a whole bunch of people. So, whilst, does it repeat the last cycle and go to $10? I mean, back then they were, they had a second asset that they were progressing as well. That was in the middle of utility euphoria. They were completely exposed to the spot price. It was following that. This time round, I think it'll be a little bit more subdued journey because they are being a bit more prudent and locking in some contracting to ensure that they don't get caught last time with that with their pants down and completely exposed. But I guess the question will be after Q1 next year is like, what do they do next? And is their next move going to be accretive? Is it going to be, looking to develop one of their other assets? Again, some of those are in states here in Australia that have a policy banning uranium mining, not legislation. So, where do they go next? I think is the next leg on the question for Paladin. But yeah, they'll perform well.
Guy, if I'm interpreting you, or what you're kind of signalling correctly, it sort of sounds a bit like when we pose a question about valuation, you're kind of alluding to the fact that the share price is more a function of flows rather than analysts doing a DCF because there are new investors entering the space or they want some thematic exposure. Therefore, and they might have a mandate that they can only buy companies in ASX 200. And so even though you could do a DCF on Paladin or Boss and you can't quite figure out like the current market cap and share price as a result of that DCF, the share price goes up because those flows are dictating price. Is that right?
Yeah, and again, I'm going back to last cycle. The financial analysis done by equity analysts on the sector was 6 months behind the whole way up. And it was because all of the assumptions they were doing for today got fulfilled immediately because of the way the market was moving. And so then suddenly, I mean, again, you look at Paladin when they first started talking about it 4 years ago, and there was a 20-cent price target on it. Now there's $1.15 or $1.30 or whatever they are, or maybe higher. And you put the spot price difference into those models, and you say just the spot price alone has not has not justified how you get there. So they're always tweaking things, as when you muck around with a model, you can basically get it to do whatever you want. And so that's why I sort of sit there and say, I'll throw in $85 and have a view on it. And I also need to be aware, to your point, what flow's coming in and how are they looking at it? Because as I said, if you'd followed analyst valuations last cycle, you were getting out way too early.
Right, mate. Boss Energy, BOE, they've just announced they've started their mining operations at the Honeymoon Well in South Australia. Mate, these in situ leaching projects, these uranium paleo channels, what do you think about this as these type of deposits in terms of probably more the perception when you're talking about governments and uranium mining ban policies in certain states like WA, Queensland's pretty similar. Is this in situ leaching compared to your drill and blast and dust generation and everything, is that going to be perceived a bit different, do you think?
Well, yeah, I mean, it's not the mining you're used to, of getting dirty and getting dark.
I'd prefer this one, actually. I don't miss the bloody oil and the grease, I can tell you that, mate.
Look, the reality is because of Kazakhstan, more than half of the world's uranium is actually extracted via ISR or ISL, whichever way you want to call it. It is the way that uranium sits in, because it travels, there's uranium in salt water, right? There's a lot of uranium in the ocean. And it's basically traveled through old water courses and got stuck in geological faults. And so when you have that sort of sandstony or porous sort of material, it's a very efficient way to extract it and low cost and a low environmental footprint. You look at that Boss site when they remediate their well fields. You wouldn't know that there was a mining operation there because it's a bunch of PVC pipes over the surface of the ground with some PVC going into it. Again, because there's been such a long history of that process, the chemistry of returning water back to the water tables and what have you. So yeah, I mean it's an extraordinary method of mining so as a result the cost is a lot lower. You're not having to plan a decline and how you're going to mine off it. You're not having to plan on strip and backfill for open pit. There's no crushing mills and all that sort of stuff in your plant. It's just basic chemistry.
And what do you think about their, I know Trav sort of touched on it, where Boss is sitting right now, market cap a few times multiple of the project MPV. What do you think about it as an investment at this stage?
So, I mean, again, part of the problem is a misunderstanding on analysts as to how to value those projects. So, when you look at a conventional mining project, whether it's underground or open pit, they've got a large indicated or measured resource, right? And they've had to get that large resource so that you can plan how you're going to mine it. Because if you get it wrong, it's expensive. So when an analyst looks at that and they go, great, I've got a 200 million pound resource here, I'll give it $2 a pound. So there's a $400 million valuation on that, plus all the other stuff. With in situ leach, you don't need to define your ore body to a measured and indicated status. When you look at the Kazakhs, for example, again, they produce half the uranium in the world. They tell us that a well field or an ISR field will continue to produce to 2035. And analysts go, great, no problems. We'll give it a value on that. You're going to do 4 million pounds a year till 2035 on this field. Excellent, or this project. There's no resource on that. They haven't gone and infill drilled that. They've gone and defined where their ore body is. Maybe there's some inferred drilling at best, and the market buys that. But when it comes to Western ISR, the analysts don't want to do that. And when you look at what Boss has done, I mean, I think Duncan took that from 16 million pounds to 76 million pounds or whatever he's done. Plus he's got the proven that there is ISR amenable ore bodies at his satellites. Like, does he need to, as an investor in Boss, do I want him spending millions of dollars to go and, prove a measured resource out there? No, because you don't need to do it for ISR. And I think that's where, when you look at the potential of what he can do on that project and property, based on how previous ISR has happened in other parts of the world, then the valuation's not as expensive as market consensus would have you think.
You say they don't get a resource, they don't need a resource because effectively they're just pumping fluid in, leaching it out, and bringing it back up. Can they control how quick they leach it, how much they pump into it? You said, companies say we're just going to produce this much amount every year and so on. Can they control that, or is it fixed, determined on the size? Have you got much insight on that?
You can. So you can, on the fringes, you can. You can't sort of turn it off and on because you're needing to impregnate your area with fluid and have it moving, right? So you can't, if you turn it back off, then you've got to return it. I mean, you can potentially continue to pump things whilst it's on care and maintenance, but you still have to re-inject all your wells to get it restarted again. So it's not an easy, I'm going to mine today, no, I'm not, and not tomorrow. But potentially, you can, and again, it comes down to cost and recoveries. You don't want to be, when you get your optimal flow rate, that's giving you optimal recoveries, at the right price. You don't want to be necessarily mucking around with that unless you go into a different part of the well field where the geology is slightly different, and you have to change that to play around with it to get back to your optimal mix.
Pivoting over to still an ASX name, but the project in the US. So Peninsula, bit of a disappointing one for shareholders who were pretty invested in the restart of Lance project there. I'm sure the shareholders were under the impression that production and sales were imminent when it was revealed their offtake contract for the resin processing was terminated by UEC. And now Peninsula's faced with a chunky funding gap. They need to accelerate the construction of the back half of their plant as a result of that because they can't have it treated by UEC. And there's some uncertainty relating to the delivery obligations of some near-term offtake that can no longer be met from their own production. And it's weird, right? In a year where uranium stocks have been all the flavour, they're actually down year to date. I guess my question for you is Peninsula back on the home straight from here? How do you weigh up their future risks, amid the kind of performance that they've had now?
Yeah, I mean, I got caught by that announcement as well, and again, I guess it comes down to don't assume everything's going to happen. Check and check again. Those pounds are still going to come to the market, and yes, there's a delay, and yes, there's an additional cost in doing so. I mean, they were always going to add the back end to that plant. And this has just accelerated those plans. And so, and it was quite a brutal, share price response to that. I think when it comes to, and I saw Wayne and Rachel this week, I think when it comes to the utilities, those utilities have been with Peninsula since 2015 sort of area. And from what I understand, they will. I mean, they've got no choice, right? So what are you going to do? Of course, you're going to try to extend those. And it does now become that issue of there is a funding gap, and so how do they do that? My sort of view on that one is they're obviously talking about a bunch of different options to fund. And they will come to a conclusion eventually. But given that, there's sort of obviously debt or prepay or utility conversations, and they don't happen quickly, they can sort of sit here and say, we're just going to progress those conversations, do what we can with the money we've got, but largely preserve capital. If the equity market thinks we come raise, so be it. But we're going to do this the right way. And that's what I'd hope they would do. And do I see those pounds coming to market? Yeah, I do. I mean, there's nothing wrong with the project.
I think I remember listening to the analyst call the day that announcement came out, and I actually remember the question you asked, which was, do you guys have defence advisors appointed? Because the cynic in you believes that, actions tend to happen for a reason. Do you still have a suspicion that UEC actually wanted to lob a bid and that's why they terminated the contract, or have you kind of come around to a different line of thinking?
I have a suspicion that maybe UEC weren't as ready with the processing plant as they thought they might be, and they hadn't necessarily got Christian Rance to where they needed it to be, and turning on that plant to just process resin from Peninsula potentially might not have been seen positively by shareholders because there was a cost to do that. I think when they originally sort of were looking at that, they thought they would be bringing their material through that plant at the same time as Peninsula's. So yeah, I mean, it wouldn't have surprised me if UEC had lobbed in a cheeky one down there. I don't think it would have been received too well by the Peninsula management and board. But again, there's no reason why somebody else is not looking at it. Yes, I know it's low pH, which in Wyoming, most of that ISR is an alkaline leach. But, to my perspective, it's been technically de-risked that the flow and the recoveries are going to work with that solution on that ore body. And, at the end of the day, there's a big resource area outside of, what they're planning on procuring from in the short term.
There's a couple really big undeveloped players. So Nexgen we've touched on to start with. Do you think they're getting any closer to turning that into a mine? Any sort of thoughts you've got there, or maybe contrarian thoughts?
Yeah, I mean, 2 years ago I was a little bit more contrarian. But I mean, one thing that they have done extraordinarily well is that they have brought the First Nations and community along for the journey and really, really worked hard at that. And I think a lot of people underestimate the power and the impact of the First Nations in the Athabasca Basin and how they can influence whether your project comes on. So they've done a lot of work there. They've done a lot of work around the environmental. And, at the end of the day, a lot of that project will be debt financed and the payback's incredible. I mean, it's less than a year if they want it to be. I mean, it's just a phenomenal ore body. So, are they closer? Yeah, but their timing is definitely going to be dictated as to the timing of the debt piece, and there'll be an equity component with that. So, they don't need to hurry. They've got their environmental submissions in at the moment. So even if they wanted to do something, it would still be Q1 or Q2 next year waiting for those. But yeah, I think there's a lot. They might look like they're not doing much at the surface, but I guarantee you the feet are madly flipping underneath the water.
Over to Europe, Guy, and Berkeley's a bit of a maligned one on that ASX big project in Spain. You ask around about this one, and it's just like a permitting disaster is kind of the word you're going to get told on the street about it. What do you make of this one? I mean, it's still got a hefty market cap. The size of the prize is, I suppose intriguing, but does this thing just never get permitted?
It's a permitting lottery ticket, that one. It is. It's it's a low delta option that I mean, you've seen it a few times in the last sort of few years where the stock starts running and you think, what the hell's going on? And so there's a presidential election and this guy's pro things, and there's just so many layers of bureaucracy where they've got 227 out of 228 permits, and they always seem to be one permit away. It's nothing wrong with the ore body. The location of the town is a little bit Kalgoorlie-esque, but I mean, to be honest, I've not done a lot of work on that recently. There is a very small legacy position in the portfolio that I look at every now and again. And I say, you know what, it's either going to stay irrelevant or it's going to become relevant. And if it becomes relevant, we'll look at it a bit more closely.
There's a couple more marginal players, all of which actually have have tenements or projects in Namibia. So I'm not just rattle them off and try and get your thoughts. Elevate or EL8 is one of them. You got any sort of outstanding thoughts on that one?
Yeah, well, I mean, look, you look at Namibia and touch wood, it's one of the stable uranium producing jurisdictions in the world, and probably the only one at the moment in Africa. So there is a history there. There is uranium. It's low grade, so you think you have to prove size and scale to be able to to stand up there. Elevate's got the ability where they've got a number of areas that they can focus on. They can continue to prove that there's ore body extensions, or they can bring some of that resource into an indicated status potentially. But they've also got some interesting stuff in Northern Territory as well, which as that area gets a bit more eyeballs on it, I think DevEx are the only ones drilling up there at the moment with 2 rigs. So from that perspective, you've got a little bit of optionality of 2 reasonably good jurisdictions that will be developed at some stage.
Throw in the mix there in Namibia, Deep Yellow's Tomas, and they sort of state in their ASX announcements that they expect FID by mid-2024. Then Bannerman's Itango, also Namibia, they state they're targeting FID by in H1 2024. I feel like Itango, I'd love to see the number of updated DFSs this project has had. I'm a little bit. I wonder if it'll ever be built, just given the amount of updated DFSs has been. But should investors start thinking about these? Will these projects actually be developed now, Guy? Because uranium's facing structural change, or do you think they'll be really, really high option value, and they'll in a booming uranium market? Yeah, sure, the stocks will pump, but the reality is them becoming mines is still a long way away.
Yeah, I mean, look, we took a substantial position in Bannerman 6 years ago when we first started looking at this. I think we took a chunk of stock out of somebody that was looking to shake loose, and we took it back then because we liked that sort of retail leverage that it had, and Brandon's very good at promoting the story and getting people in on the story, and so it was sort of a chuckle that here we fast forward 6 years and potentially he's one of a second wave of projects that may come to market. But with Bannerman, he was extraordinarily shrewd in downsizing that project to a Tango 8, just to show that there was an ability to start that at a smaller scale that didn't have the large capex requirement of their original study. And here we are at $70 and change, and utilities starting to really wonder where the rest of the supply is going to come from. And you're looking at Namibia saying, there's producing assets there. There's a good trained workforce. There's a supportive government. It's easy to get it to market. We're sitting there saying it wouldn't surprise me if they're in a position. The price has to continue to go up, of course. But they've brought that project to a point where it can start at the right price. So Deep Yellow as well. John's John. He's last cycle legend, and people want to shake his hand in the street and get him to kiss their babies and things. And again, he's low cost drilling and shallow paleo channels in Namibia, low grade. I think he's got about 100 million pounds of resource or something there now. He's a little bit behind potentially Bannerman on engineering studies and things like that. But again, a jurisdiction that's going to allow more uranium. I mean, I guess part of the problem might be that 2 or 3 of these guys try to all get up at the same time, and there's a fight for resources, equipment and people primarily.
And to Australian soils, Guy, how do you navigate and think about the ASX players that have Australian projects, noting the challenges just from a regulatory perspective in getting these projects up and going? But I mean, DevEx just raised money. You've got Toro with their WA project, Cauldron, also WA, Alligator. They got stuff in South Australia and Northern Territory. So when you look at the landscape of those companies, how do you make sense of them, and and any you like for certain reasons above the others?
Yeah, look, I mean, Northern Territory, every geologist that's spent any time around uranium always froths at the mouth and gets a bit of that sort of, nervous shuffle when they talk about the prospectivity of uranium in Northern Territory, and it's the Athabasca of Australia and things like that. I mean, it's certainly, as we know it, it has its challenges, especially around community and Indigenous views on the matter. But, I think at some stage there needs to be a consolidation play up there. There needs to be somebody with a good sized checkbook to really start proving out that there is another Ranger or Jabiluka there, and there probably is, instead of the sort of game at the moment where everyone thinks they're going to be able to pick up Jabiluka once the Mirror people, tell Rio they can't have it anymore, or Rio decides that they've done enough and can get rid of it. That's not a play for Northern Territory, but there's certainly an upside in somebody putting a drill bit in and proving up stuff. South Australia is the other obvious one. So, when you look at your question where you say, well, you've got Alligator Energy, who's got a project in South Australia and an exploration project in Northern Territory. What are the two jurisdictions that are going to allow you to do stuff? It's those two. Western Australia, I mean, it's mind-boggling that you've got a radioactive waste disposal site being built there, that you're going to have Iluka throwing in thorium and uranium into a tailings disposal with their monazite separation, and there's a government policy that's not even legislated that says you can't mine uranium. It is a bit silly, but trying to get in the head of the politicians is going to send you nuts. Same thing with Queensland. I think the problem in Queensland is that most of that stuff is owned by non-Australian entities, with the exception of probably Paladin up there. So there's no one putting pressure on the government up there to say, hey, this is a no-brainer. And you look at it from the perspective of how do you pitch it to politicians, jobs and money to the economy. And when you're turning around to Western Australia and saying there's uranium because eventually we're going to displace coal, Western Australia goes, who cares? Don't do any coal. Potentially you pitch it to Queensland and say there's some uranium deposits here. You can export a commodity that's going to produce zero carbon electricity. And, as coal winds down, if it does, there's another industry here for you.
I gather you're a Liberal voter, Cobber.
My politics is irrelevant, but what I dislike is stupidity and political decisions. So let's not even get into the conversation about nuclear power. Stupidity behind that either.
Good.
Perfect. I really appreciate you coming on the show, Guy. I'm sure the money miners will get a bunch of value, and I mean, I've learnt heaps on uranium, nuclear along the way. So thanks, mate.
Oh, and mate, what's the uranium price going to hit spot price? I know that you said that's the market that matters, but how high is it going to go this cycle?
He'll re-quote you next time you come back on too, remember?
You say 200? 300?
On what time frame?
Within the next 12 months.
Next 12 months?
Yeah, top tick.
Let's throw out $175 just to be really controversial on the spot price.
I like it. I like it.
Mate, geez, you'd be sick of Zoom calls after today, Cobby. You've had a couple already, mate.
There's our title of the YouTube.
Sorted.
Yeah, Guy Keller says uranium's going at 175.
At $175, I might be doing the next call from the back of my boat called I Told You So.
Awesome. Thanks a lot, Guy.
Good on you, Guy. Have a good evening, mate.
Thanks, guys. Appreciate it.
Cheers, Cobber. There we go, boys.
We got the full sort of perspective, stocks, where nuclear is at, how they build a portfolio around this thesis. So
175.
175.
That's all that
Trav,
matters.
what do you reckon when you asked the sort of in-depth question about the supply, what did you think of his response? Did you find it, did you agree? Did you compelling or change your view a bit?
I think there's different time periods to pose the supply question. Like he obviously, the point he honed in on was what happens with the Kazakhs. He sort of, the rest kind of addressed and thought, there's like reason to believe that the other expansions or whatever, will be bloody met. But the Kazakh supply was the interesting response I found. I just I don't know. I think that's the question. I think in the short term is where everyone's going to get bloody really ecstatic because it's the short term and it's fun and prices just go vertical. But it's the medium term and long term dictated by the supply dynamics in the market too. So.
But it's the people are going to make money off hype, not actually out of uranium production. Most of it's just going to be out of hype.
They'll make money and lose money, and
from
that's
the punter side.
just what happens with commodities.
Yeah.
It's human behaviour, huh?
It'll be back to crypto next anyway, so who knows, right? Thanks all the sponsors. Anytime, anywhere, anything exploration services. Not any radiation level, as we said before. Terra Capital.
SMEC, K-Drill, and JP Search. Thanks a lot, guys.
Thanks to all the sponsors. Love your work. And Money Miners, hoodaroo.
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 The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.